Within some of the sectors you mentioned, whether it's healthcare or industrials or others, these are global kind of companies. Do you look at more domestic focused companies, or are you okay with big multinational firms that are doing business in some of the emerging market countries?
We would look at both, and that's a great distinction between larger cap, which is more global, but then also in small cap. If you look at the Russell 2000, is up almost 39% last year versus large cap up 32. So smaller cap tend to be overly exposed to U.S. businesses, the U.S. funding liquidity, the Fed's quantitative easing. So we would look at that as being a little rich because small caps did so well last year. So looking in larger cap, more globally exposed, I think emerging markets for disciplined investors, they've got to understand which emerging markets, not all, but which are going to provide growth and the companies that can benefit from that. So I would say we are looking at global companies. We are looking, though, with a U.S. interest, because relative to Europe and a lot of Asian countries, I think the U.S. growth performance is going to be relatively stronger.
Some people thought heading into this year that the Fed was a risk factor for stocks, in particular, the tapering program. But it seems that the markets have digested that and are looking at that interest rate rise over a year from now, potentially. Yeah. What is the big risk for stocks right now?
So there's the known knowns and the unknown unknowns. I think the Fed is going to be always in the background. It's like the canvas that we all have to paint on. And I think the Fed is a risk if they get it wrong, like a 1994, for example. We do not consider this to be a 1994 environment where an inflation spike led to a run up in rates and fixed income did very poorly. We're looking to be kind of flattish. I think the Fed's going to be a little bit more methodical, a little bit more planned out. So I don't know that the Fed is going to have any inflation pressure to force their hand. Labor markets are still slack, so I think the Fed can take their time and give the market information that they can digest. If there were an inflation scare that would change things, we don't think that's going to happen. But I think probably one of the biggest issues for investors right now is going to be this earnings season is going to be light. And revenue is going to be more important, and we think the beta game or the market game of 2013 becomes more of a stock picker's game. Active management, picking better stocks that can generate pricing power in a challenging revenue environment. The market should be more friendly to them, but also valuations matter. We've seen recently the high flyer, the big momentum stocks. When valuations get ahead of themselves, eventually markets are going to care. So you want to make sure that it's a valuation sensitive assessment.